This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
An upward revision in historical oil demand by the International Energy Agency in its monthly report points to a tighter global market than the West's energy watchdog had previously estimated. Our balances are now more in line with observed market fundamentals, which underpin the view of traders. We believe the tighter balance for 2021 and 2022 is already reflected in the price of oil and the forward curve, the IEA told Reuters. Oil prices have powered toward $100 a barrel in 2022 as fuel demand recovers from a pandemic crash, in a rally that has driven up energy costs worldwide, forcing some businesses to cut output and draining cash from consumers' pockets.
Financial institutions channeled more than $1.5 trillion into the coal industry in loans and underwriting from January 2019 to November 2021, despite many having made net zero pledges, a report by a group of 28 non-government organizations showed. Cutting coal use is a key part of global efforts to slash climate-warming greenhouse gases and bring emissions down to net zero by the middle of the century, and governments, firms and financial institutions worldwide have pledged to take action. But banks continue to fund 1,032 firms involved in the mining, trading, transportation and utilization of coal, the research showed.
Moving on to the top news in the energy sector.
Asia is expected to face higher oil, gas and coal prices if Russia invades Ukraine and triggers sanctions and reprisals from the West, analysts say. While Asia could potentially benefit if Russia diverts its energy exports from Europe to the east, Europe's hunt for non-Russian gas could boost liquefied natural gas, LNG, prices and draw away Asia-bound cargoes, they warned. Threatened sanction from the United States and Europe could also hamper Asia's ability to take advantage of any additional energy supply Russia might offer.
Greenhouse gas emissions across the European Union rose in the third quarter of last year, the bloc's statistics office said on Tuesday, as economies recovered from the coronavirus crisis. Estimates by Eurostat showed emissions by business activity amounted to 881 million tons of CO2 equivalents, up 6% from the third quarter of 2020 when COVID-19-related restrictions had induced a sharp economic contraction. The electricity supply and manufacturing sectors both contributed nearly a quarter of emissions for the period, Eurostat said, while households and agriculture each accounted for 14%. Next, we have the top news in metal markets. China's state planner will hold what it called a reminding and warning symposium with domestic and foreign iron ore traders on Feb 17 in an effort to ensure market stability, according to two sources and a notice reviewed by Reuters. Iron ore prices have been diving since last Friday after regulators and the industry association vowed to take measures to stabilize the market. The National Development and Reform Administration, NDRC, together with the market regulator, will summon traders including 5 Chinese iron ore trading firms such as RGL Group and Tangshan Haiqi, as well as 5 foreign traders like Glencore, Mercuria and Itochu, in Qingdao on Thursday morning, according to an NDRC notice reviewed by Reuters.
Copper prices ticked higher on Tuesday after Russia returned some troops to base after exercises near Ukraine, easing fears about a potential invasion and boosting financial markets. 3-month copper on the London Metal Exchange (LME) rose 0.5% to $9,965 a ton by 1700 GMT after a 0.6% gain the previous day. COMEX copper gained 0.6% to $4.54 a pound. It was unclear how many Russian units were being withdrawn to their bases after an estimated 130,000 Russian troops had been moved close to the Ukraine border.
We will now look at the top news in the agricultural sector.
Japan's Ministry of Agriculture, Forestry and Fisheries, MAFF, is seeking to buy a total of 54,692 tons of food-quality wheat from the United States in regular tenders that will close on Thursday. Japan, the world's 6th biggest wheat importer, keeps a tight grip on imports of the country's second most important staple after rice and buys the majority of the grain for milling via tenders typically issued 3 times a month. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.